Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. The biggest geopolitical news remains BRICS having new members. Saudi Arabia, UAE, Egypt, Argentina, Iran, and Ethiopia will be joining the group. On the markets front, the Turkish central bank raised rates by 750 basis points, causing a rally in the lira. The rates now stand at 25%. Now, markets remain focused on Powell's speech. Ahead of the speech, dollar remains strong substantially. Euro and GBP remain on the weaker front and US yields remain close to the cycle highs. Morning, JK, probably a long night for you. Is the market positioning for a hawkish speech by Powell ahead of Jackson Hole? What's your take?
Good morning, Swaraj. Uh, yes, pre-Powell positioning has actually dominated the global market action yesterday, with yield curve somewhat inverting more. And in the US, of course, the yields have come off their recent highs, but the yields have come off much more in UK and Europe, where we had seen very weak PMI numbers. Eurozone 10-year yields are more than 25 basis from the high of the week, while in UK it is more than 33 basis points down. Now, the statements of individual Fed members have given a cautious outlook on the future actions. In fact, policymakers Harker and Susan Collins supported the rise in bond yields also, as the rising borrowing costs helped the cooling of the economy. On the other side, one of the ECB members actually said the tightening campaign is up and running, and inflation's rate has been faster than its rise. And actually, this sounds some kind of dovishness in his statements. Now, these are coming, on the back of the weak PMI numbers that were published earlier this week. Now, back to the Jackson Hole. Now. Powell delivered an unusually brief opening address last year, which came as a bolt of lightning, because he promised to beat down inflation even at the cost of a recession, and the market reaction was very, very strong. Now, fast forward to 1 year, in Powell's speech, the market positioning is now actually the mirror opposite of last year, because 1 year forward pricing has been near 4.9%, while the latest dot plot gives a forward guidance at 4.625%. So the market pricing relative to Fed's rate forward guidance is nearly 30%, 30 basis overpriced heading into this Jackson Hole. Now, actually, these forums should be used by central banks to correct any misalignment in the market's expectation on policies, particularly keeping in mind that central bank's own assessment of medium-term price stability and growth. That is what I think Powell would do. So it's all going to be market positioning that will dictate the action versus what the central bankers are going to say. And in fact, I am still focused more on what Lagarde will say, because the weakness that we've seen in the Eurozone economy, as well as UK, that has started to show its vulnerability to the big hikes that we have seen over the last several months. On position squaring was also more clear in stocks, where three major US indices were down more than 1%, and Nasdaq dropped in profit taking after a big rise in the last 2 days, despite NVDA not disappointing the market and announcing a better outlook. The global index was also down 0.91%. Profit taking was clearly evident in almost all the markets. On the forex, dollar has shown further strength, and as it is said to continue as positioning weighing on the major currencies. However, Chinese yuan has been a better performing currency in the last 2 days, as its oversold conditions somewhat weigh, and some speculation about weekend stimulus measures. In fact, irrespective of the Jackson Hole, dollar is poised to gain some more losses suffered since last year, with possible impetus coming from central bank speeches. Now, just for a perspective, from 108.83 in the last week of 2022, in the 6 week in the 6 weeks post Jackson Hole last year, it went up to as high as 115. And while rates have gone up more than 2% since then in US, from 3.25 to 5.5, DXY has actually retreated below 105 now. This is because other central banks have been raising rates aggressively since then. But now it seems that others are either pausing or starting to cut, while Fed is likely to hold higher for longer. Eurozone in particular, as I mentioned earlier, is on the verge of even pausing the next rate hike, or maybe maybe even the peak might have been seen, depending on more data that is going to come. And UK maybe just behind Europe in the economic slowdown. So US continues to be the star performer among all the major economies despite high interest rates, and that should keep the dollar really very well bid. So irrespective of Jackson, I feel the dollar is on a strong footing. Now the steep fall in the rupee, rather the USD INR extended yesterday to the good support zone below 80 to 40, where it had a good bounce with the confluence of importer and possible central bank buying as well. Of course, the fall in the USD was more of a technical nature, driven by position unwinding rather than any fresh fundamental developments. And with the dollar index strong and the yields, going higher, dollar rupee should not see much downside, at least ahead of the Jackson Hole minutes. Also to mention, in the MPC minutes, DOS mentioned that policymakers need to be ready to preempt any second round impact of food price shocks. Does it mean that inflation remains entrenched? Policy rate may still be hiked. Of course, right now the central bank is addressing it mainly through liquidity management, and we will be very closely watching for the next set of inflation numbers that will be out. Now, as you said, the BRICS added a few members, 6 new members to its group, and that's a positive development. At the same time, there is no mention of any BRICS currency being floated, and about which a lot of speculation was there in the last few months. Now, on the certain EM actions, Korea and Indonesia kept rates on yesterday, while Turkey raised their policy rate by 6% to 25.5, much more than what the market was expecting. And the Turkish lira has actually seen a rise of 5%, more than 5%, in fact, against the US dollar. That's a big shift in the policy, as well as the shift in the direction of the Turkish lira, which is been making news by its consistent weakness all through last year. So all in all, quiet day in prospect, perhaps some position squaring, but all action may be withheld for Monday morning. Thank you.
Thank you, JK. And as you mentioned, yields have come off much more in UK and Europe after the weak PMI numbers, while statement of other Fed members have given a cautious outlook, and they were sounding a little more hawkish. When it comes to ECB members have been a little dovish in their statements, as they are saying that inflation is retreating quickly. So more than Powell, maybe Lagarde's speech might garner more attention as the Eurozone economy remains on the weaker front, and markets currently are pricing a Eurozone pause in the next meeting. Dollar has shown further strength, and in the Asian currencies, Chinese yuan has been a better performing currency in the last few days. When we talk about USD INR, it saw a steep fall below 80 to 40, but from there it saw some good demand by importers and maybe even the central bank. That's it from us today. Thanks for listening. Tune in on Monday as we discuss the possible impacts of the Jackson Hole symposium and what Powell speech entailed. So do tune in on Monday. That's it from us. Have a very good weekend. Thanks for listening.